What's up, guys? It's your boy Leadership Muntla. As you know, I bring you the education on a high key. So right now we're about to have a market trading session with Shakes. A lot of people have been asking for episode 2 of SMC sessions with Shakes. You know, like I say, guys, try to learn as much as you can, pick up as much information as you can from these sessions, because we all share different knowledge. And I said I wanna go and meet different traders. You know, I actually thought of a great idea. I actually want to go have a trading session with the FX goats as well, just so all the knowledge that I share, that all the other traders share, and you know, whatsoever, all of it, everything combined, you're able to pick out the best way that you think fits for you, because not all traders trade the same. You know, we might execute the same, might have a similar entry point, but we see the market different sometimes, or we see it similar, but it does link at some point, and we all make money, so that's what's important. So right now we're about to go to episode 2 with Shake Money. He's gonna be getting a bit deep. So last time I was speaking more about price action, you know, long big time frames, and how do you tell where the market is going, and you know, where to close, where to open, execution and stuff like that. Okay, that's my neighbor, that's my rich neighbor. But yeah, you know, so but in this session I want him to actually take us a bit deep, where he tells us more about how do you actually prepare for a trade. What do you see in the market? What do you look out for? You know, what exactly do you actually do when you're in a position where you're obviously holding a loss? How do you save your account, you know, and etc, etc. So yeah, I'm home. You guys like my driveway? It's fire. I know. Just kidding, guys. But yeah, let's get into it. After this market session, I'm gonna just literally get some rest, because today has been a crazy day. But yeah, it's in the evening, as you can see. I am home. Just close the door because it's a bit cold. It's getting a bit chilly. Just times, you know. And Kelly is not home. Actually, Kelly, I think, is out to shoot a music video with Baby Days or something. So you know, guys, Kelly's a big hip hop guy, so he just loves that space. He's the type of nigga to chill there with Lily Wee. You know, once he's rich enough and stuff. But yeah, we're gonna end the session here. You know, like I said, this is my bar. In here, basically, we chill, trade, and it's our trading camp, you know. So let's give a bit very friendly. We play PlayStation here as well. But yeah, we're gonna get into Shake Money. But yeah, stay tuned and actually get to learn more. SMC is an interesting trading strategy, really. I've also been applying it, you know, how I understand it as well, mixing it with a bit of my knowledge. So that's why I'm also very interested in actually learning more and getting to understand what exactly can I add from SMC onto my trading style, you know, because you guys know I chop the chart, you know. And yeah, man, let's get into it. I'm gonna get my tablet ready, and then just so I see what Shakes is gonna be speaking about, what exactly we should do, what we should fix, because there could be some people out there who are actually doing wrong, so you guys to learn with us. Let's get into it. So yeah, guys, here we are. This is the chart right here. Trading is open. Of course, trading with the biggest broker on the continent.
The best in Africa.
The best in Africa. I mean, you know, far. Yeah, so I see Shakes already has some analysis up. I think it's what he's been trading. We're looking at gold. Already I'm seeing, before I even start speaking to Shakes, you know, I guess I'm also getting to understand how SMC works, because it's similar to how I've been teaching how I trade. You guys actually watch the videos. Looks like a nice drop there. But let's get into the conversation. Let's see exactly what Shakes has got for us. My brother, Shakes.
What do you do? It's your boy, the one that knows the Shake Money, as you guys know.
Yeah.
We trade all the week. Guys, I'm a swing trader, guys. That's why I'm mainly on bigger time frames like daily, H4 and H1.
Yeah.
But you can also scalp with this, but preferably I go for long money. That's why I mainly stick to H4.
Yeah.
Daily.
Oh, this is an H4 chart here, no?
An H4 chart, bro.
Looks
so
clean,
this H4 chart, basically the analysis also come from the daily time frame.
Yeah.
So even if I go to the daily time frame, it's pretty much the same thing that you see, right? It's just that.
Yeah. Okay. See, obviously, bigger time frames.
Yeah, just looks small. But basically, this is what I got from the H4 time frame, of course, with analysis from.
Hey, make sure, dog, you can sit this side so that. Well, let's get the bar chair, so we can actually look at the chart nicely. Yeah, this is so interesting, bro. Like, this chart looks as simple. Like, I like simple charts. So when I see something like this, it does. You just trigger me to actually.
No, it's actually basic, bro. All you need to do is just be patient and wait for the chart to get where it needs to get. So you need to trade what you see, because most people are impatient, because I'm dealing with order blocks and you're dealing with supply and demand zones.
Yeah.
So people are impatient, like, okay, sharp. There's people, that's what I'm saying, I'm a swing trader. There's intraday traders, there's what else, scalpers.
Yeah.
But I'd rather choose to swing and go for the long money.
Also, given your trading strategy, it allows you.
It allows me to go long, knowing that my risk management is very, very high. Right? That's why I do prefer to trade smart money, guys. So yeah, let's just jump straight into it, right? So from the previous video that we shot with leadership, you guys saw that
on episode 1,
episode 1, this chart has been moving in an uptrend, right? And I did specify that let me just not ruin that. The market, right, is made up of highs and lows, right? So in an uptrend or in a trend that's going up, price keeps on breaking highs and creating new highs. Yeah. So price is creating higher highs, higher lows, higher highs, higher lows. I'm just gonna give you guys a practical example of that, just with
So just hold on. So what are we focusing on today? What are we gonna be speaking about?
So basically, we're focusing mainly on everything direction. Yeah. First and foremost is the direction, because that's the foundation of everything. You cannot know the strategy without the foundation, which is market structure, guys. Yeah. So market structure plays a big role, of knowing exactly where to put your order blocks, exactly where to find liquidity, exactly where to spot your fair value gaps or your imbalance. So yeah, I'm just gonna look for the path.
Yeah, I think the path should be by the rectangle, I think.
Yes.
Yeah, right there.
Right? So yeah, I don't know if you guys gonna see it, but this is a small drawing, guys, right? As I said, right? An uptrend moves like this. Right? Yeah. So it's creating higher highs and leaving higher lows, creating higher highs, as you guys can see. So this is what was happening with gold, right? Yeah. So every time gold creates a high, right?
Yeah. Okay, a high like that. Yeah, I see that. Okay.
We put a structure, right? So just gonna clone that quickly. Clone, and yeah, just gonna put that.
Yeah, right there. Okay.
So in this instance, right, if price is breaking highs to the upside, right, price is leaving demand zones in this instance because it's an uptrend. But in a downtrend, price will be leaving supply zones.
Yeah. Okay. Right? Okay.
So I'm just gonna mark everything so that it is more clear and transparent.
Okay, so
guys, this diagram is not gonna be as perfect as. Yeah. It's just an example
to understand exactly how price moves.
Yeah.
And also how we look at it from an SMC trader point of view.
So what leadership would say is this is a step ladder.
Yeah.
It's basically the same thing, bro. It's a step ladder, right? But in this step ladder, right, price. As I said, price is making this higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. Yeah. So every time price breaks a structure, which is the previous high, right, it leaves behind a demand zone.
So that should be on the first option.
Use this as a demand zone, right? Let's say this, a demand zone, right?
Yeah. Don't you want to change the color of that fill in so it's more visible? Like make it red.
This fill in, right? Okay, I'm gonna change it just now. Just
so that it's more visible. Yeah, that's good. Red as well.
Can you see? Is it that visible? No.
Yeah, now it's visible. Yeah.
Sweet.
Yeah.
Let me remove this one, guys. Yeah, here we go.
Yeah, what are those?
Right. So these are basically demand zones, right? So every time price breaks a high, right, it leaves a demand zone. every time price breaks a high again, it leaves a demand zone.
Okay.
Right? So price is going up, leaving these particular demand zones.
Okay, that makes sense.
Yeah, so I'm just gonna mark the zones out. Just give me a moment.
So in this aspect, we would say that our main intention is to understand what exactly price is doing, so we're able to take the right trade. Yeah,
most definitely, right.
Okay, makes sense.
So these are the demand zones.
Demand zones, okay.
Right. So basically, that's the same thing you're seeing right here. Right. So if I place these zones or these structures right here, as you guys can see, price keeps on making higher highs. Yeah, as it pushes up. Yeah. Right? Okay, I see. Yeah. So it's basically creating a higher high, higher low, higher high, higher low, higher high, higher low. Yeah. Right. Okay. And what is it doing? As I said, it's leaving behind demand zones. Yeah. Right? Here's a demand zone. So on the demand zone, is that our entry, or what do we do? Where do we enter? Yes, demand zones are basically points of interest where you can take your entries. So as soon as price gets to that zone, you can take an entry, but you need to take an entry at a high probability order block, which obviously has an imbalance, has liquidity. Yeah, that's a high probability order block, right? You can't just expect price to turn here without sweeping any form of liquidity. It will not be valid. It does not have enough value for it to actually give you what you want. Yeah, exactly my point. You stand a chance to actually possibly blowing your account or losing before you could exactly my point. Move into profit. Okay. Right. So I'm just going to remove. So my understanding, so SMC is fully out, not fully, but it's based around basically catching those snapper entries. Yes, most definitely. What we would call like a stop loss hand. That's the entry point. So when people put stop losses, that's where we go in. Most definitely. So people basically, this, as I said, basically here we're trading in line with the banks, right? Yeah. And most of the retail traders are quoting a liquidity zone, which is where you enter. Maybe let's say someone would enter here, right? Yeah. There's a double top. Yes, it's profit, but we're looking to enter it from here for it to go down. Oh, okay, I see. You understand? Oh, yes, this is your profit. This is your double top traders. Trading the double top. Hence, I'm saying I would prefer to trade it on a higher time frame, because even though you do trade this double top, yes, you'll be in profit, but the initial trade is they creating liquidity so that this order block can be a high probability order block. Oh, makes sense. It makes sense. Yeah. Yes. Yeah, since I think gold is going down right now as you speak, right? It's been buying, but it's looking down. It's facing down. So what do you expect now? So I see that gold, of course, we're looking at current price. Gold seems to be dropping as things look. So yes, I'm getting to that point, right? So as I said, the previous video, right? The minute you see price failing to create another high, right? Yeah. Because this is the last high price created. Yeah. Right? This is the last high price created, and this is the low that created this last high that price created. That's the low we mark as our structure, right? So marking this low as our structure, this is the change of character, meaning that what price is turning. Oh, change of character is what we would call like what, a breakout or change of that, something like that. Yes, change of direction. Oh, okay, right? Cool. So there's a change of direction and there's a break of structure. Okay. Right? So change of character is when a sell trend is moving to a buy trend, or a buy trend to a sell trend. Change of structure. Yes, change of character. Change of character. Okay. So as you guys can see, this is the last high price created, right? And then price gave us this change of character, right? Leaving us with an order block right at the top. Okay. Right? Okay. Yeah. So this order block that formed at the top, right? So many people would basically enter your double top somewhere here. Given that there is a rejection or some sort of a resistance that we're seeing on the high there, I would have definitely taken that right here. Once the moment the price was failing to break this price, I know I would have went in, obviously. So do you guys do the same thing? Would you have taken the sell there? Or you'd have waited for it to actually? I'd rather wait for it to get to a specific zone, right? But if you go down a lower time frame, right? I just want to show you something. Let's go down a lower time frame. Okay, let's see. Right? So on a lower time frame, right? If you pay attention, we're not gonna miss this move right here. Yeah. Right? Because why? For instance, I'm just gonna say, right, we have another low, which is here. right?
Yeah.
Here, this is the change of character that happened at this specific point.
Oh, I see. As it was picking up, and then it broke there.
Right. So after it breaks here, right?
Yeah.
We have an order block. Sorry guys, that's not gonna be perfect.
Yeah.
You guys do understand what I'm trying to, right? And then we'd have an order block at this zone. So guys, how do you find your order block? Your order block is the last opposite candle, right? Before price or after price breaks the structure. So the last opposite candle.
So let me understand this. So fine. So price right here goes up, right? Comes back, instead of continuing to go up, it breaks the structure by going lower.
Yeah. So this is the change of character.
Okay.
Every time price breaks.
Okay. Right, yeah.
We look for the last opposite candle before it broke the structure.
That's the order block.
So this is the last buy candle.
Again, order block meaning that is what the entry, the possible sell position that you could anticipate or something like that. So or some sort of a resistance.
Yes, exactly. So wait for price to get to that certain zone and then we'll take a trade. Right. So I'm just gonna put the order block. So the order block, guys, is the same size as the last opposite candle that you're gonna be marking out.
Oh, okay. Oh yeah, is that why you're stretching that order block like that? Because that's the size of the previous candle.
So I'm just gonna make this a bit
lighter so that it's
lighter.
Yeah.
Right. So can you guys see?
Oh yeah, it makes sense. Yeah, I would have then I guess these are, if this is the size, then this would mean these are all our sell opportunities. Is that the case, or what is it?
You know what's happening right here, right?
Yeah.
There's traders that are actually going into this market, right? There's a lot of structures that are happening at this zone. For example, I'll show you something that's called a head and shoulder.
Okay.
Which is
I see it.
What we call a QMA. Alright?
Okay.
So from this, how many people have entered at this?
I see 3 entries.
Right. So this would be the left shoulder.
On the head, and then
you guys are gonna enter here.
Yeah.
Right? But what is it actually doing? It's creating some form of liquidity.
This
is not the actual. So we trade the actual sell. Right?
Oh yeah,
because yes, you sold, you made profit.
Yeah.
There's nothing wrong with that. But long term, if you enter here, you cannot catch this overall sell until here. So us entering here, we're avoiding the chart from going down, coming back up, and then going down. So from here we move straight down.
So you would have waited for the price to go right into liquidity.
Right into liquidity, sweeps liquidity. Right. So what makes this order block a high probability order block, right? We have liquidity there, and then
that's crazy because it does sweep liquidity when I'm looking at it.
Yes,
because this is the sweep, right? The one at the end. That's crazy. Okay.
So it does create that liquidity. So basically, what price did is it swept out all these people that have been taking trades here. Here, right? And as well, here's more trades that were taken here. As you guys can see, this is a double top, guys. So liquidity, guys, in SMC is your double tops, your double bottoms, your trend line, right? And I don't trade fair value gaps. I treat them as liquidity, right? Why don't I trade fair value gaps or treat them as liquidity? Because let's say we have a fair value gap here, right? So this is the imbalance, fair value gap, right? People trade this. Yes, I've seen many people chop this, but for me, it's been very difficult for me to trade. So what does the market?
Is that a high risk?
It's not really a high risk, but if I have an order block at the top of my fair value gap, it's gonna be very difficult for me to actually trade this zone. Because as you guys can see, yes, price does come here, it reacts.
Wait, so what's fair value? What does fair value gap mean?
So the fair value gap is basically orders that were not filled in.
Fair value.
It's like a void.
Okay. Right? So like SMC has its own language and stuff.
Yeah, most definitely,
Okay.
So I'm just gonna remove that, right? So that's why this order block is a high probability order block. And then yes, there is refinement to this. As I said, this is a point of interest. So there are people that refine this to a certain extent so they can get a specific entry right? On 15 minutes. But I do not refine my order blocks or my points of interest, right? So what I'd rather do is, let's just say 50% of this zone, right? I don't know if it's perfectly, I'm gonna try to make it perfectly at 50%. Right? Let me just move it a bit down, right?
That should be.
Let's just say this is 50%, guys. So right, I would not allow price to sometimes price does touch the order block and it does go down.
Yeah.
Sometimes it does come here, or sometimes it does come to the last point of the order block and it does continue selling, right?
Yeah.
But what I would prefer to do, right, is for risk management, enter at 50% of the order block, right? People ask me like, how do you get your sniper entry? How do you? 50% of the order block. Like,
what's the risk? So let's say I enter now at the 100, like on the order block, on the lower part of the order block. Is that like a higher risk of obviously holding losses for a longer time?
Yes, that's the risk of holding losses for a longer time. If you have an account and you're comfortable to trade,
you can
the account properly, you can enter this trade right here.
So basically that whole that order block you say is basically an entry zone, and you get to pick what type of entry you are looking for depending on the trading account you're trading.
Most definitely. Depends on the balance you have, depends on, because literally if you use the lowest lot size to enter right here, right?
Yeah.
And you'll be able to hold the loss from here
till the 50%
until it starts paying you, because my take profit will be my previous low.
Oh, okay.
Right?
Okay.
So maybe the first take profit would be here.
Yeah.
And bear in mind, this is an hourly chart, right?
Yeah.
So from here to here, how much could you have made?
This is an hour chart. Yeah, this is crazy because I think how I would trade it, right, is that I would catch the order block entry, right, and then from there I just like snipe it in, like keep multiplying it with the whole step ladder entries that I use as well. So I think it also works very hand in hand with how I trade. This is actually quite nice.
Most definitely.
Yeah.
So yeah, guys, that entry I did not put at that on my 4-hour time frame. I didn't put this entry in, but I'm showing you that we could have caught this sell from here.
Yeah, and it dropped.
Right, not literally, just mainly focusing on this entry here, right here.
And this,
right? So I'm just gonna remove this zone.
Okay.
So guys, you guys say what's this called? Head and shoulder. Guys, we say QML.
Okay, QML.
A QML. Yeah, a QML. Some other word, bro. So
okay, that's interesting. So I see price obviously after that sell it dropped and then it went back up to go respect the previous low.
Yes, most definitely. So this could have been our take profit right here, right, on the entry that we took here.
Yes.
Right. So now what has price done? Price has given us another order block at the top, right? After giving us this,
break of structure. Oh yeah, I was about to ask you, is that a break of structure? Change of character.
Yeah. So I would say this is a change of character for me.
Yeah.
So I would say this is a change of character. So price gives me a change of character at this point, right? And
so wait, so can I ask? Can you say the price changes character and broke the?
No, you can't say that, dog. Nah.
Yeah. Okay.
So as the price came into this zone and started dropping, and then price broke a low, guys.
Yeah.
Obviously, there's gonna be a lower low. There's gonna be a lower high.
Yeah.
All right. So price eventually gave us this order block at the top, right? While price giving us that zone at the top, right? I have a QML.
QML is what you call it, similar to more of a
head and shoulder.
Or a resistance. It's like a strong resistance.
Yeah, which is in line with my what? My 50%.
Yeah, 50. Oh, makes sense. Okay.
You understand?
Yeah. Okay.
So what did the market do? The market went down, broke another low right here, right? And then price created this low, price went up, right? Creating these equal highs, and then giving us, let me just say, let's say now it gave us the last low, right? Price didn't create any other lower low. So what must price do? Maybe for instance, if it gave us a change of character, it was gonna give us an entry.
Oh, okay.
Somewhere in these zones.
Okay.
Right? So price continued what? Coming down and it went up again.
Yeah.
So price did give us a low, and then it gave us a higher high, low, higher high. And then price gave us this last high right here.
Yeah, right before it dropped, yeah.
So after price giving us this last high, right? The minute price breaks a low, right?
Oh, okay.
Which means price is giving us a change of character, or you can say a break of structure.
Yeah.
But in this instance, it's a break of structure.
That's how you come back in there, and then I see that.
Yeah.
What's this? What order block? Is that an order block?
We have an order block at the top. You have this one. The structure that was taken out.
Yeah.
But don't forget that there's also internal structures, right?
Yeah.
There's this structure right here, but there's no difference between this low and this low because it's still gonna give us the same order block.
Okay. Yeah, makes sense. Yeah.
Price is still
in terms of entry, same.
Exactly my point.
It differs on take profit and where exactly you want to close. Okay.
Price is gonna give us the same order block. So now we have an order block right here, guys. Right?
Yeah.
And then obviously for this order block to be a high probability order block, it has to have liquidity. So we can see that price did leave an imbalance at this zone, or fair value gap, void. There's many ways to call it, right?
Yeah.
Right at this point, right? And price gave us what? Equal highs.
Yeah, I see that, yeah.
Right? So price did give us these equal highs, but however, this price did touch this zone, right?
Okay.
So I did take this trade actually. I did send the setup on my group, and I did send this setup on my story on Instagram, right?
Because it's actually like it's moving as it should, yeah.
So I'm gonna pull this, right? So this is one of the liquidity zones that price came into, which is the fair value gap, and it touched just the tip of my order block.
And
so that's my first trade, guys. So sometimes the market does not come to 50% of this chart, right? So the best thing to do, right, is enter 3 trades or enter your trades with, you understand? So maybe your first trade would be here, your second trade would be at 50%, and your third trade would be
because I mean it's price given. Sometimes it may hit 50%,
sometimes
but that is a zone that you must be aware of.
Yes, that's the specific zone.
You're playing around the door now. Yeah,
exactly my point. Hence price just touched this a bit and went down. You understand? And then I marked out this as a high, which is going to give us the liquidity for which zone? For this specific zone.
Yeah.
Right? So guys, sometimes there's certain zones that people are not sure of or how to trade them. So the best thing to do, as I said, right? Don't ignore any other or ignore order blocks. Let's say you have an order block here. This one that where price is selling right now.
Yeah.
But then you have an extreme order block at the top.
At the top, yeah.
Right? You can't say you want to initially wait for this extreme order block or wait for price to go to this extreme.
Okay, so what you're saying is that as much as, let me just zoom out. So as much as there's a big order block at the top, right? And yet that's the extreme order block. But then you have another order block right here. It doesn't mean now you can't be like
you can't utilize it.
Yeah, now I wanna wait for the extreme one. I have to leave this in. So okay, I get you.
As long as it's a high probability order block,
then you
have a chance to take a trade. But
okay.
Keep in mind that you have an extreme order block.
Yeah, there's a chance that once price does go down, wherever it's going,
exactly,
it will come back and
my point.
Give you a challenge.
Imagine if I didn't trade this and I left it, and then price did sell. Yeah. Because I'm waiting for the zone right here. Then what am I going to do? Right?
Okay, so now would I be right if I say with the trades that you've taken, right? Here's an order block, we're in a sell now. If I say the price now, what is possible up next is that the price will come and then give us a break of structure here, or like a breakout, or quite what character. What is it? So basically it's gonna go past here, is what I'm saying.
Okay, so
would I be right?
What I'm looking at right now, is I'm looking at, I have a QML right here.
Yeah, okay.
So which means it's a head and shoulder, right? Okay. I'm just gonna go to a lower time frame.
Oh, head and shoulder. Oh, so you are expecting price to actually reject on that low?
Yes, most definitely.
Okay.
Right? And I do have another order block at the bottom.
Oh, okay.
Right?
Okay.
So basically, I'll call this a sell to buy model.
Oh, I get you. So you basically be charting like, so if price decides, because I mean we can't decide what the market wants to do. So if the price decides that no, listen, it's gonna stay between this zone, then this is your order block, this is your order block.
Most definitely.
This is your sells and these are your buys.
Yes. So it's a sell to buy. Let's say for instance,
sell to buy.
Let's say for instance, I'm in a sell trade.
Yeah.
And I'm only looking for sales, but the chart is moving at this order block at the bottom.
Yeah.
And then I have an order block at the top, and obviously price is in a sell trade, so I would only be looking to what? To sell, right? So if I'm looking to sell, right, I wouldn't waste this order block at the bottom just to come and sell right here. So I'm going to buy to sell. I'm going to buy to
sell. Oh, I see.
Right? So at this point, right, since we have an order block at the top, right, we have this order block at the bottom that took trades and people are in profits for sure, right? This can be an inducement area where people are forced to take trades at a specific zone because there's an extreme order block at the top, which is initially going to give us the final or the initial sell. But however, people can take trades here. They will make profit, but
must be vigilant.
The initial sell can start from here. Here they're just inducing people so that people can enter trades. And then if you do hold for long, price can initially, let me just get that.
Yeah, okay.
Right? So price can initially come here, right?
Okay.
Come here.
Oh, okay, I see.
And then come here.
Okay. Oh, yeah, because that is the overall. Okay, I see it now.
Yeah, this is the extreme zone.
The extreme zone. If ever the market decides to actually extend the extreme zone. So now can you show me with the path, can we see what would happen if price doesn't go to the extreme zone? Like it's staying in between. Let's maybe using the path.
Let me just show you. Right? Yeah. So my prediction.
How would it look like?
My prediction. First and foremost, I need to look at my market structure.
Yeah.
Right? At the moment, this price is not breaking any highs and lows. Right? So I have highs here at the top.
Yeah.
Right? So it's either this price will play around. Right?
Okay.
Where's that part? Right? So it's either this price.
It would be like a sell or sell to buy, you said, right?
Yeah. This price will, depending on what market structure is telling me.
Oh, okay.
Because as I said, the foundation is market structure.
Okay.
And eventually this price can come to this zone.
Yeah. Oh, and then sweep.
Initially come to the 50%. Initially sell.
Yes.
Right?
Okay.
If not, it will sweep these people out.
Oh, okay. Right? Makes sense, yeah.
After sweeping these people out, it can initially come down to the zone. Right? And if price does not come to that zone, right? It will break. If price comes to the zone, and that's why I'm saying market structure is very important, right? Because sometimes these order blocks can become breaker blocks. So a breaker block is like a support and a resistance.
Okay.
So if price fails to what? Price can fail to what? To turn at this order block.
Yeah, to turn.
It's gonna come down.
Fails to reject.
To do that, it's going to come back into the order block
and then give us.
Then go back down again.
Okay, okay, I've got my answer. Okay.
Right. So that's just the basics of smart money. Like it's not really something complex. You just need to pay attention to detail.
Okay, that makes sense.
That's what I'm saying. I can predict, yes, depending on what my market structure is telling me. But however, this thing right now is not breaking any lows, any highs. So this is our low that we have, and this is our high that we have.
Oh, okay. Now it makes a lot of sense.
But initially we have points of interest. I mainly focus on the points of interest. So I do not focus entirely on the market. Like
on the market,
I can't. And obviously, you trading this on a higher time frame, it gives you room to like.
Yeah.
How can I say? Be patient. You need to wait. You're not trading every day. You don't need to look at the chart every day. So initially, this won't come here in 15 minutes.
Oh, I get you. Yeah.
And even the people that entered at this zone, right? What was the date?
Okay, let's see that. Yeah,
right?
That would be about the 6th of May, yeah.
Right?
No, the 6th of May was yesterday.
And they're holding these trades until when?
Yeah, probably like till tomorrow, end of the week, yeah, a couple of days.
This thing is still moving till 6.
Yeah.
People are in profit. So how long were you holding this trade? Right? So yeah, guys, initially this is smart money, guys, and yeah, it's not the smart money in detail because I'm explaining. I'm like giving you guys all the information at once.
Yeah, I think we just need to keep giving them like more episodes, bro.
Yeah.
We can't put. I feel like today we shared a bit too much information.
Yeah.
But it's perfect. You know, too much is never too much. You know. This is episode 2, so we will try just give them maybe once a session every week. Maybe in future maybe we'll try to get deeper into price actions, try to get deeper into time frames. But yeah, man, this is an amazing concept. This is my second episode with you, and I'm also just picking up. I think that people also are aware that I'm also picking up the lingo nyan.
Yeah, so next time I'm just gonna fully focus on market structure.
On the market structure.
Next time we're gonna fully focus on liquidity. Then mainly focus on order blocks. Focus on. So it's.
Yeah, we actually so we're gonna plan out every single episode, but this episode 2, you guys actually loved watching this. From your boy Leadership Montla and the Montla brothers, Shake Money here, making sure that you guys learn SMC. And look, man, the information might be like crazy. It's crazy information. It might be a bit hard for you to take it in, and that's why we're putting it on YouTube so that you just can save the video, you like the video, you share it with your friends, and you just keep watching it over and over again till you understand, you know. But yeah, from me myself, Shake Money. You know what's going on. Thank you guys, appreciate it.
And of course, we're chopping with the best broker, guys.
The biggest on the continent.
Let's get it.
Let's go, guys. See you guys on the next episode, man.
Yes, sir.
Episode. What's episode? Episode. See you guys on the next episode. Now, guys, this chat is too clean. Shake Money. We appreciate it, brother.
Man love, brother.